Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, January 7th. We have got a busy show ahead of us. First up, the Information has exclusive reporting that China this week asked tech companies there to halt orders of Nvidia's H200 chip. We will bring you all the details. Then we are talking to Sarah Guo, founder of the venture firm Conviction. Sarah opened for Jensen Huang at CES this week and published a sharp essay on how companies can stay competitive in the AI boom. And it is Wednesday, which means it is time to dive deep into this week's finance newsletter with our finance editor. And we are also then going to talk about a Bloomberg report that Discord has filed confidentially for an IPO. And we will wrap with a conversation with OutSystems, an AI platform for developers, to talk about ROI in the age of AI and the intensifying race for the best coding models. Got a lot going on, so let's get right on into things. The Information's Asia Bureau published exclusive reporting this morning that China this week told tech companies to halt orders for Nvidia's H200 chip. Joining me now to discuss the news is our Nvidia reporter, Wayne Ma. Wayne, welcome back to the show. It's great to have you here.
Hey, thanks for having me, Akash.
So this was a big story that our Asia Bureau published. What did we learn about the regulations of China, what the government is saying, and how the situation is evolving?
Well, I think the key thing here is that this is like a temporary halt, right? And the reason why it's temporary and not a permanent halt is that Chinese companies still need NVIDIA chips to train their models. And China's ambitions to become a leader in AI still requires, I think, NVIDIA chips, if only because the Chinese equivalents still aren't as efficient or as capable in this sector.
So temporary meaning, the way I read it was, I mean, it's basically while we figure things out, hold off on placing your orders right now. That was my read on it.
Yeah, that's right. And I guess the big question is like, how long is that going to be, right? Is it going to be a month? Is it going to be 6 months? Is it going to be a year? I don't think it'll be that long, but at the same time, it's going to have a material impact on NVIDIA's earnings, depending on how long this is.
Well, I want to get to the size of the opportunity in a second here, but this strikes me as a bit surprising because we just heard Jensen talk to reporters earlier this week, talking about how demand is very high for H200, and from his end, seemed like it was all hands on deck.
Yeah, I mean, I think the reason why there's a temporary halt is that the Chinese government also doesn't want to rely too much on NVIDIA, right? They don't want to rely too much on Western technology. And so they've been kind of trying to develop their homegrown AI chip companies to try to compete with NVIDIA. And I think there's a worry that if they just let Chinese companies buy, as many H200s as possible, there's no incentive to foster that local homegrown kind of technology. And China will was just lag behind and never be able to compete.
Can you talk a little bit more about that? I mean, how much do customers need these chips in China?
Oh, they definitely need them. They need them badly. Like right now, China's chip AI chip industry is nowhere near at the level of Nvidia's, and so it's going to take a long time, I think, for them to catch up if they ever will.
And you talked about earnings from NVIDIA's end. How big of an opportunity or a missed opportunity if they can't sell these chips eventually? We don't know what's going to happen in the long run, but how big a size of market is this for them?
So NVIDIA has said in the past, as recently as late last year, that their sales to China could range from anywhere from 2 to 5 billion a quarter. So that's now almost like a $20 billion a year opportunity for them. They took steps last year to stop reporting or factoring in China sales into their earnings, just to give investors a better idea of what they will make. So there's that. But again, like if they can unlock the China market again, or include that in their earnings, it'll be a great opportunity for them and for investors.
And let me just ask you a forward-looking question here. We just saw all of the announcements from Jensen about the Rubin family of chips, and I can't help but think about how long this issue sort of persists in different variations with different chips. I mean, we're talking about the H200 today. We were talking about the H20 a couple months ago. When the Rubin family of chips comes out, I mean, like, do you foresee this cat and mouse issue persisting for the next couple of years even?
Yeah, I mean, I think at the end of the day, there needs to be a balance, right? The U.S. government doesn't want China to surpass, the U.S. in AI, but at the same time, they don't want China to foster its domestic chip AI industry, so that they don't need Nvidia chips anymore as well. Like Jensen Huang, the CEO of Nvidia, has always said that it's better that China in the world relies on U.S. technology for everything, and so they have to. So I think this is always going to be an issue with whenever Nvidia comes out with a new chip: is how much can you sell to China, just enough so that Chinese companies don't try to compete and build their own chips, but not so much that China surpasses the U.S. in AI.
Right. Well, it is a fast moving story. And Wayne, I want to thank you for coming on to discuss it. That is Wayne Ma, our NVIDIA reporter here at The Information.
Thanks for having me.
Okay. AI adoption is being closely watched in 2026, and there have been a lot of theories thrown around as to why it has been slower than many tech companies would have hoped. Sarah Guo from Conviction wrote a good essay on X about that earlier this week. She also published a piece about how VCs can remain relevant in a hyper competitive landscape, and she was at CES opening for Jensen Huang earlier this week. I want to bring her on to talk about all of that. Sarah, welcome back to the show. It's great to have you here.
Thanks. Great to see you.
So, quiet week for you to start off the year, eh?
Yeah. Well, I think we are just running on full cylinders in the industry.
Good stuff. Well, look, I want to talk to you about some of the stuff you wrote about. I also want to talk to you about the panel that you led at CES. You know, right after you had your panel, Jensen Huang unveiled some new details about the Rubin chip. And the broad question I have for you is what net impact you think that family of chips and those innovations from NVIDIA is going to have on AI adoption broadly?
Yeah, I think the two basic takeaways for the broader industry versus chip experts would be one, like the Nvidia pace of innovation is like really punishing for competitors. Um, this is a 5x more powerful chip on a flops basis from an inference perspective. It is a huge, like it's a family of chips, but the systems are huge, and so there's continued scaling of um, memory and memory bandwidth and a lot of the bottlenecks that people have been concerned about in the NVIDIA ecosystem. And, late 2026 is a very near term timeline to be delivering such a big upgrade. Right. And so, we'll see what happens later this year. But I think if those chips actually get widespread in the industry on time, application developers and then end consumers should expect that we can use a lot more tokens for much less cost, right? Which is
And,
sort of the overall goal for NVIDIA here.
and when you say when you say if those chips sort of get in the market on time, I mean, I guess the assumption that I'm hearing you say is that they eventually will get there and they eventually will get bought. It's just a question of when. Is that the idea?
Absolutely. So, it's been stated already that they're in full production,
Yeah.
and I'm only nodding to the fact that these are extremely large scale, like
Right. It's the
frontier
whole system.
hardware
It's the whole
systems
system.
delivered, right? And so you can end up with all sorts of constraints to get to final delivery at the massive scale we're talking about. But I do think this idea of inference efficiency that's starting with NVIDIA chips, but is also in all the software layers like these cloud platforms like Base 10. They The impact for the industry is that a lot of things that look like, much more advanced applications of AI, like long horizon agents, just smarter, applications overall are going to be widespread.
And a lot easier to roll out in some cases. It leads me to an essay that one of two essays you wrote on X, which is articles on X are now people's favorite way to get their message across. You wrote about AI adoption, and I want to read a quick passage from what you wrote. You said, there's a mismatch between where AI value is showing up and where organizations are looking for it. Enterprises complain about missing ROI even as demand for models and inference grows rapidly. Someone is getting the value, it just isn't always visible on a dashboard yet. I want to ask you about that. Who is getting the value then? If we can't see it on the dashboard, where is it coming up in companies?
So I think there's like a mix of who's getting that value today. If you do better journalism, right, using AI, you accrue some of the value. Maybe you get to go home earlier. Maybe the information gets better readership and engagement, right? But I'm not being glib. It's really like productivity gains get reaped in different ways.
Right.
Part of the point of the essay is, there are a lot of reasons why we're like still very early in sort of business deployment of AI. But one of them is a product question, right? Things are very, very early in getting frontier capabilities exploited from a product perspective, like deeply in the workflows. But the reason my essay focuses on is like, what's the incentive structure, right? If I, leverage all of this productivity, and like, let's say 900 million plus ChatGPT users as an example, and everybody else consuming these tokens is actually leveraging these AI capabilities. Well, I can take those gains or I can share them with my business. And some of those gains are personal, obviously, in terms of new capability. But it depends on the incentive structure and like whether or not organizations really are aligned with their workers as sort of owners, right?
Right. Now, the other thing you talked a little bit about is the change management angle to this story. And that was something that you also covered in your panel before Jensen Huang came up on stage. Another part, and I do want to read it because I thought it was a good point in the essay, is you said using AI privately to improve your own output is generally safe. Proposing automation in a visible, coordinated way is not. And then you go on to say this often gets misread as fear of technology. It is better understood as caution about how institutions handle change. So, I talked about this a little bit with a couple months ago with Vinod Khosla, and he was talking about who the people are on the ground trying to use these tools. And your comments here kind of reminded me of a question that I've been having is it that we don't have the right people on the ground at these companies trying to implement AI, or just that those people uh, are resistant to it? I mean, where do you see the problem coming up?
I actually wouldn't say, in some cases, maybe it'll be a question of the people and the adaptability of the people. But I'd say for all humans, like, am I or are you using AI to the maximum effectiveness today? I am not. I don't know about you yet. But I really want to be. I don't think that's because I'm resistant to change. I think change is hard. And this change has happened really, really rapidly. Right. And so that's just like a fundamental recognition we should have, which is, change and technology adoption is hard for every human being. And if organizations want to happen, they really have to invest in that. I think like a lot of great organizations already understand that, but sometimes we're in this like vortex of misunderstanding the timescales of how quickly this is all happening. It's been
Right.
happening for 3 years, right? And so I think that's one recognition. But the fear, I think actually fear is really rational, right? If I think that I leverage AI and I figure out how to automate parts of my job, and I am smart and informed enough to know that AI capabilities are progressing, it's a natural question to ask. Well, like, does my role change, right? And do I
And,
get
and
rewarded?
that causes some nervousness around, do I want to attach my name to this initiative, to this P&L?
Absolutely. And I think if that change affects other people too, when you like grow up in the management structure, it depends on the incentives within organizations, right? Okay. Well, do I want to change Akash's role? Do I want to change Sally's role? And like, what does that do for me within the politics of an organization? I don't think
Right.
that's simply, it's just like these organizations have a bunch, every large organization has a bunch of mixed incentives. And the winners in this transition to AI native companies are going to have to figure out how to align that with the success of the organization.
Now, you talked in your panel about how healthcare has been sort of a sleeper sector that has really adopted AI faster than some would have otherwise expected. And Open Evidence is a portfolio company of yours that has seen as a lot of success. Can you talk about why healthcare has been sort of this oddball case study, and what is it about Open Evidence's product that has really gotten traction?
I think there is a business model, uh, uh, alignment here that is really special in the case of open evidence. And then there's like a technical structural reason. So really quickly, open evidence is an app that any provider can use as a consumer, right? You like download it in an app store and you just start using it and it's free and it helps you with your day-to-day work against a really difficult challenge, which is understand medical research and, be the best provider, the most informed provider you can. And expanding capabilities from there into sort of helping with all sorts of interactions. But like there's no misalignment. It just makes me better at my job. And Open Evidence has an ad-based business model that supports that, right? It doesn't have to do change management until half the doctors in the country are already using it. And that's a lot easier, right? The organization is convinced by its users that it's useful. And so I think this is just a really interesting case study for the industry, which is like consumer and prosumer can be a really powerful adoption mechanism. The technical reason why AI could be really interesting for healthcare is that a lot of the data and a lot of the interactions are unstructured, right? And so, large language models and agents like in these fragmented systems working on free text, medical research, doctor's notes in phone calls, it's really
Right.
good at that.
And I mean, they've been trying to find ways to make that a little bit more structured for a while now. Um, I'm curious, I know you got to run here. You put out this predictions episode on your podcast a couple weeks ago, and one of the predictions you made was that you are forecasting some kind of a change in the sentiment around robotics, or at least parts of robotics. And I thought that was interesting because the conversation around physical AI and robotics is becoming so much more. It's much more of a focus for everyone, really, even in the first few weeks of the year here. I mean, talk to me a little bit about why you see the sentiment around robotics changing and what you're expecting there.
This is a very high risk year for the AI robotics industry, but that's why I'm excited, right? I think that there are a number of companies, uh, including Sunday Robotics in our portfolio, that are like meeting reality this year. They intend to ship real products to consumer homes for testing. And these are like they're step function different than the products that have existed before because they are, generally capable, right? They're not designed for a single task, much like the LLMs were different from the pre-foundation model task-specific models. And so I think there's sentiment improving, or there's like all this heightened interest for two reasons. One is like all the researchers believe that there can be a huge amount of progress on both the models, data, and deployment side. And then of course, like if that is real, there's a lot of investment and a lot of big tests, real world evaluations that are going to happen this year. And it was a huge part of Jensen's CES keynote as well. He's been one of the earliest believers in the physical AI world, in part because that, multiplies the size of the opportunity for
Yeah,
AI.
I know. Well, I mean, the business case is certainly there.
Yeah, but it's a really high conviction bet to be investing in it for as long as he has. And I'm a big believer, but we'll sort of meet reality this year.
But so where does that sort of collapse in sentiment happen then? I mean, where do you forecast it sort of breaking down?
None of this works yet in production, right? If you ask me, is there a generalist robot in any real world environment? Like me and other people from this industry are going to say no, right? So it's a really big open question. They're like amongst robots are really hard products to deliver, right? Like think of autonomous vehicles as an example of it.
Yeah, yeah,
The safety case is really important, and the real world is always more varied than one would hope, right? Like, I
right.
think it's sort of easy to imagine like in the home, but also, in factories or in data centers. And so, these robots have to be really robust to those environments, and the products are really hard to deliver to begin with. And so we are going to see more failures than successes of these companies, and they're very expensive to ship, right? I think if they work, they're hardware companies. They can be, and perhaps general ones with really expansive applications. You could have hardware like Tesla, Apple, GE, Siemens type companies that are really impactful to the manufacturing world, which is another area of interest for us. But there's going to be a lot of failure as well, and it's
And
expensive.
I think it kind of leads to an interesting question for me, which is that, where does that cycle sort of start? Because, I think what you're pointing to is that investors will wake up to the reality that, hey, this stuff is not working as well. We shouldn't be affording it the valuations that we've seen sort of start to creep up. On the other hand, you have big public tech companies, continuing to talk about it as an application. And I guess in my mind, I'm sort of wondering where what's the chicken, what's the egg? What comes first in terms of if Nvidia continues to keep talking about it. I don't know. Does it take longer for investors to wake up to that reality? I wonder what you think.
Oh, I don't think so at all. I would push back and say, I don't know that the prices are wrong. Like some of those people, I think some of those people are gonna be right at massive prices, and some of them are going to be wrong. Like, in any other really high value market, right? It's about picking winners. And NVIDIA has been a huge contributor to this ecosystem, delivering models, open source data, frameworks, the hardware itself. And so I think they're definitely supporting the success case here, as you would expect. I would just say I think it's a question of like, does it work or not? And we can certainly have waves of sentiment you know, uh, as an investor. If a specific bet doesn't work, your reaction can be that bet didn't work or the sector didn't work, right? And so I
Correct.
think that could be the change in sentiment.
Great. Well, Sarah, I want to thank you for coming on the show again. It's always a great conversation. That is Sarah Guo, founder and investor at Conviction here on TITV. Okay. In some ways, it's never been easier to invest in AI, with every public company jumping at the opportunity to overhaul its business in the face of the new technology. And on the other hand, given how much of the stock market is reacting to AI news, it's becoming a whole lot harder to beat the market with a novel AI trade, I should say. That is a phenomenon that Ken Brown, our finance editor, wrote about in his weekly finance column out today, and I want to bring him on to tell us more about his piece. Ken, welcome back to the show. It's great to have you here.
Hi, Akash.
So, what made you want to write this column on this day, the first week of the year, as people are looking ahead to their investment portfolios? I mean, this is not something we typically write about, the information.
Right. So there's two reasons. One is this is going to be a year where we're going to probably see some AI IPOs. There's talk that Anthropic will go public this year and OpenAI will follow maybe next year. And investors are eager to get into this stuff. The other thing is I got a question from a relative of mine, a couple relatives, because I deal with AI all the time and I deal with money and how should we invest in AI? And so I did a little research and looked at what was out there and decided, the timing was right to write a column.
Okay. So the column was great at diving into some of the more creative ways that people are, or that companies rather, are offering exposure to,
Right.
and by companies, I should say, companies whose business it is finding retail investors ways for them to make money. Talk a little bit about some of the deals that we've seen in the market and how that's shaped up.
Yeah. So, most of these big AI companies are still private, right? I mean, there are public ones like Google and all that, but the pure plays, the startups are private. And so both Schwab and Robinhood and other brokers are trying to figure out ways to help investors get into these private companies. And, my research shows it's generally not a very good idea for individuals to do this. The fees are high, they get in at the wrong time, the prices are high. And the reality is they're kind of last in line to get this stuff. I mean, all the big, powerful investors, the VCs, the private equity firms, the sovereign wealth funds, they're all in there first. And so, us little guys, we are not a priority and we don't get the best deals. And so I just wanted to, if people got excited about it, I wanted to sort of at least sober them up a little.
And just to be clear, this is individual investors finding ways to get exposure to these private companies through these newer platforms, I guess, that have become more popular. That's sort of where your caution is coming into play here.
Well, so my caution is two things. So one is, yes, there is a push for by brokers, and investors are asking for it to get access to these companies, Anthropic, OpenAI, all that stuff. I want to invest in AI. I want to get into this stuff. How do I do it? And so that's happening. The other thing is people are making bets in all kinds of novel ways on the stock market with the companies that exist publicly and other ways that they feel like they can get AI exposure. I also warn people about that. I mean, so this is a little bit of a personal finance column because
It's a
we don't
finance call. It's just a finance call, Ken. It can be
just a
whatever you
finance
want.
column, and we don't tend to do that, but it is a confluence of events, and so the track record of these kind of funds that people are buying now is terrible. The funds perform badly. They can do great for a while, and then when everyone puts the money into it, they they do terribly. A lot of them shut down. Most of them trail the market. I mean, when you look at the data, like 80% of them shut down or lag the market after 3 years. And so I just want people to be aware that this is exciting. We spend all day writing and talking about it, but for an individual investor to get into it, you just got to be smart about it and careful. The other problem is everyone owns this stuff already. Google, Microsoft, Meta, all these companies are public. They
Right.
make up around 25 to 30% of the stock market. So everyone's exposed to this. So why do you need any more?
Wow. Because more is more, Ken. I mean, that's the whole
It's
point.
no, exactly. And it's a very exciting area, and there's going to be monster companies and lots of money to be made. And so, as I end the column, I say I've given all this advice, and next year everyone's going to come back to me and say we made all this money ignoring your advice. And so,
Right. Yeah, yeah, that's typically how holiday dinners end up going.
yeah. And so, you two can come back to me and
No. Look, well, I don't invest in any of this stuff. We just write. That's all we do.
exactly.
Um, but I do want to talk to you about another pocket that you touched on briefly, which is the energy sector.
Yeah.
And the energy sector is another area that people have been talking about as an opportunity. But then as I thought about that more and I read your column, then I got to thinking again, like if you just buy the S&P, I mean, the energy companies are all moving according to these deals anyway.
Right. And so the beauty of index funds, which is what a lot of people own, is you get exposure to everything. And so you never miss a big run up in something, which is fantastic. Yeah, I know the energy companies, I mean, and it's a volatile sector and people are pouring a lot of money into AI, but people with longer memories longer than a year, remember that the hottest energy trade 2 years ago was the energy transition to solar and wind and batteries and all that stuff. And that trade has turned out to be a terrible trade for investors. They lost a bunch of money. And so now people are thinking energy to power AI. And it's true, it could be really interesting, but it is a volatile sector. And the track record in the past it just ain't great.
Right. Let me ask you one more question. As we talked about investing or finding exposure to private companies,
Mhm.
I couldn't help but think about the notion that companies go public when they're ready to go public,
Right.
in the sense that they have some sort of predictability about what their cash flows, what
Mm,
their revenue growth will look like. I mean, it struck me as another point of caution here that if a company is private, I mean, yes, there is all of the financial reasons why maybe they haven't had to raise all the money,
mhm.
but there also might be sort of this reality that the company says, dude, like I'm not ready to be a public company. We don't want retail investors yet. I wonder if you think that that's another consideration to this.
Well, and I mean, that's been true. A bunch of companies like Stripe and a few others, SpaceX, have stayed private a long time, longer than you would think, given their size and success. Yeah, and then who goes out? Who goes public? I mean, one question is like, do they desperately need the cash? Right? Have they exhausted every other way to raise cash in private markets, and so they're going public? And then yeah, like, do you want to be that person buying that company that's desperate for cash? And the growth rates are fantastic. But public investors in the stock market care about profits. Eventually they care about profits, and we're not seeing that for a while. So yeah, they're gonna be really interesting. It's gonna be a great story for us. I'm happy to be covering it, but I don't know if I want to invest in it.
Right. Well, Ken, I want to thank you for coming on. That is Ken Brown, our finance editor here at The Information. Okay. Speaking of IPOs, Discord has confidentially filed to go public according to a report from Bloomberg. It would be the latest in a string of late-stage private companies finally listing on the stock market, although the report said the company could also decide not to go ahead with things. I want to bring on a venture capitalist who has followed the consumer messaging sector fairly closely. Mercedes Bent is a co-founder of Premise. Mercedes, welcome back to the show. It's great to have you here.
Thanks for having me.
So let's talk about Discord. It's a business that we haven't talked about yet here on the show, actually. So I'm excited to have you help us make sense of it. Brass tacks here. I mean, how does Discord make money? Is it a premium subscription? Is it ads? How does it work?
Discord makes money in three ways. There's kind of the subscriptions that a lot of folks are familiar with, Nitro being the premium subscription model that they have for users. They also have their what I call creator revenue. This is where a lot of the revenue from their community organizers, the people who actually moderate and create the community discords. And then they have the third, which is advertising. So there's a couple of others, but those are kind of the three largest categories of how they're making money.
And do we have a sense as to which of those three categories is the biggest or the fastest growing, even from your what you've seen?
Well, I think the last thing I've seen was private info, so won't share, but I think they, it's
We like private info here on the show, by the way.
And, I do think that one of the things that's interesting about advertising revenue generally for messaging and social platforms is it's largely dependent on how valuable advertisers think your users are. And a lot of the ways that this can come to trip up different companies is where are your users located, where geographically. For example, I've read reports online that, Discord has about 25% of their user base in the US. If you compare that to Reddit, where I've seen their user US based percentages closer to 48 to 50%, that's a really big difference because when you start to go outside of the US, users are worth less from an advertising perspective because they don't spend the same amount. Sometimes, I've always used a rule of thumb around it's almost proportional to the GDP or currency difference from that country to the US. So, for example, for Brazil, it might be worth 1/5, even though that country has very high propensity to adopt social and messaging products at a very high rate. So, I think that's one of the types of quality of revenue questions that would come up if they reportedly, go forward with this IPO. And so that's something that I would be looking for.
And what about the user base right now, the size of it compared to something like Reddit? I mean, is that something that you're familiar with?
It's reportedly quite a bit smaller. I've seen that that Discord has around 200 million plus. Well, that was what was reported last year. So we'll see how much they've
Right.
grown in the last couple of months. But compared to Reddit has over 1.2 billion of monthly active users. So there's a significant difference in scale when you start to think about what that means for advertising dollars.
But is Reddit the comp then that you would say is the you're smiling. I know this is the question everyone wants to know. Who do I comp it against and how does that affect things? But other than Reddit, which other names would you put up there?
I think this is a really great question, and not all networks are the same. Discord is really an interest first, not identity first network. And if you think about, okay, how do we categorize the different big platforms that fall into those two groups? Reddit, WhatsApp, Telegram might be more on the interest side of things, whereas Instagram, Snapchat, Facebook, TikTok would be more on the profile side. What this means to me is that as a consumer investor, a consumer VC, is users are coming to the platform because of their interest, not because of what profile I am building. It's not LinkedIn would be more of a profile oriented platform as well. And that changes a lot about how you build the platform, how you can monetize it. And so I think the better comps are probably more the messaging platforms and interest based platforms like Reddit. Funny enough, Discord in the early days in 2015 actually got its start by getting a lot of users distributing through Reddit. So this is a bit of a full circle moment. But I
Hmm.
think it might be a little bit more akin to what if to Reddit and WhatsApp than to a Instagram or a TikTok
Or a Snap
or a Snap.
for that matter.
Exactly.
So if we go with the maybe Reddit as a comp, I mean I'm sort of trying to think about the future of Discord's business and where you think it could go. Reddit obviously has done a lot with its data, and it's sort of had its own AI play. I mean, those three revenue streams you talked about with Discord, could you see there being new revenue streams, or how do you think the shape of the business changes in the future?
It's an excellent question. I think there's a lot of lessons that can be learned from Reddit. I mean, one of the biggest advantages that scaled consumer platforms have right now is that their data can be a new monetization stream. This is something that the last decade, when a consumer company or any company told me, we're going to monetize our data, I used to sort of roll my eyes and say,
Right.
sure, sure. Everyone says that. But I'm now eating my words because in the last few years, it actually has become a real capability due to the foundation models. And so if you look at the partnerships that Reddit has formed with some of the larger foundation models, and now Reddit being the number one, at least until August 2025, when OpenAI began ranking and downranking them quite a bit, Reddit really was the number one source of information and resources on OpenAI and a few other chat foundation models. So I do think Discord could do something like this. It obviously they've had a lot of uh, instances over the years where they've had clashes with their user base who is very vocal and passionate about why they use Discord and what they're here for. So I imagine that would be another fun minefield to navigate. But I do think it certainly could be a real opportunity for them to monetize via the large, hungry budgets of the foundation models to use their data for that.
Well, and so let me ask you this. I'm just looking it up here. So I was looking at Reddit's revenue multiple, and so I'm on Koifin here. So they're trading at about 17 times next 12 months revenue, 24 times last 12 months revenue. So if you were to just throw it out there, do you think Discord gets a Reddit size multiple? Is it higher? Is it lower?
Oh, you're asking me to be just totally wrong on whatever I say in terms of
It's
what
prediction season. That's what it's
it's
that's what it's for.
prediction season,
But it sounded to me, if I just connect the dots. I mean, you talked about the user base, and by the way, the geography of the user base is something we've talked about on the show with ChatGPT as well, and the extent to which its users are located in North America or abroad. Um, 25% of users in the US, I think, is what you mentioned. That's the latest estimate. So maybe it's not worth as much on a multiple basis. I don't know.
Yeah, possibly not. A lot of times multiples are also a factor of your rate of growth and of your profitability levels, not just the absolute
Right,
scale.
right. Yeah, yeah.
But
Right.
I agree with you. I think typically the public markets are rewarding a total combination of scale plus rate of growth plus profitability levels. And so for some of these data points we don't have information about, but broad strokes, it probably would be a smaller overall IPO would be my guess, just based on the size of the user base.
Great.
But
And
I
and
won't say exactly on revenue multiples.
right. And Mercedes, I just wanted to clarify very quickly. You are not an investor in Discord, right?
No.
Okay. Okay. Just wanted to make sure. I guess private documents float around even for people who aren't involved with the company. So
Exactly.
when those private documents become public, we'll bring you back on the show and you can talk more about it.
Wonderful.
All right. Well, Mercedes, I want to thank you for joining us. That is Mercedes Bent, co-founder and partner at Premise here on TITV. Okay. This next segment is brought to you by our sponsor, OutSystems, an AI platform for developers. Companies like Toyota and Roche Pharmaceuticals use OutSystems to build custom apps and AI agents across their organizations. I spoke with CEO Woodson Martin about what the company does, how he evaluates ROI as businesses look for real AI impact, and also how he sees the race for the best coding models unfolding. Here is that conversation. Woodson, welcome to TITV. It's great to have you here.
Hey, Akash. Great to be here.
So, OutSystems is an AI platform for developers, and I'm hoping you can help us understand how it's different from all the other developer platforms that are out there that are working with AI that we hear so much about.
Yeah, OutSystems is the AI development platform built for the enterprise. So companies like Toyota Motors and Roche Pharmaceuticals, Axos Bank, They use OutSystems to rapidly build custom apps, agents, and for mission critical core functions, but also to modernize kind of legacy processes with AI and agentic solutions and manage and govern that full life cycle of a portfolio of apps and agents all on a unified platform. So OutSystems is the only AI platform that's unified, agile, and enterprise proven.
Now, one of the topics that we've been talking so much about on this show are the barriers to adoption that enterprises see with AI. And one of the things that has come up this week in particular is how do you measure ROI when you're not even really sure what to measure and how to sort of assess the effectiveness of AI after you buy it? I wonder how you think about that at your company when you're pitching your platform to customers.
Yeah, I would say, maybe at the headline level, this year feels very different for enterprise AI investment. As organizations are kind of shifting from a mindset of experimentation toward accountability for real business impact, it's kind of changing the story in the way our customers are thinking. And I think one of the things that's become clear through the experimentation so far is that you kind of have to expect failure early and plan for it because most AI agents fail when they get into production. And I don't mean they fall down and break. I mean they don't deliver on the promise. And that's kind of normal. It takes iteration, experimentation, and a lot of change to get things exactly right. You know, the work that you want AI agents to do versus the work you really want to rely on the human in the loop, that's kind of hard to predict when you're first designing one of these systems. And so you need to be able to experiment. And that's why you got to really kind of treat AI as a system and not just a model.
So
Right.
you're saying don't expect the thing to work out of the box. I mean it's going to have to take a couple iterations of using the tool and
Yeah, the
training your
whole
people on the tool.
the whole idea is these are learning systems and they rapidly evolve and change, right? And
Right.
part of that change happens because the models learn, but a lot of that change happens in the enterprise because we're improving the context engineering, or we are evolving the way that users, maybe our customers or our employees, are interacting with the system because we're driving change. We're trying to drive behavioral change. We're trying to drive change in outcomes. And so this whole systems evolve fast. But the whole systems, not just the LLM, it's not just the reasoning of the agent, right? It's also everything else. It's the data, it's the workflows, it's the UX of the applications. Maybe those are mobile apps for your customers, maybe it's web apps for your employees. And all of those things need to be able to evolve quickly in an enterprise to be able to iterate to get toward that ROI. And that's why platforms are so important as part of the mix here in AI. And
And so
that's really a difference that we're
how
seeing.
how long though? This is a question that we ask people is okay, so it's going to take a while, and we've had some people say, broad adoption is still 5 years away, right? And I wonder, just when you're thinking about ROI with your clients, I mean, surely they must be asking you, well, how long should I, wait to expect to see
Yeah, I
that?
think it's a great question. Like, we're super excited about the pace at which customers are starting to see real value. One of the first customers to work with our agentic platform, we call that OutSystems Agent Workbench, was a company called Travel Essence. They're based in the Netherlands. They run luxury travel trips. Um, 3 weeks from the very beginning of the project to the achievement of ROI, an incredible story of innovation and pace. But really, what they did, they didn't reinvent the process. They have applications built on our platform that they've used for years to manage the work of their travel planners in interacting with their customers to put together these custom holidays. That was a process that would take them 2 to 3 hours per customer to research destinations, book hotels, restaurant reservations, etc. And they built a series of AI agents now on our platform that use a variety of different LLMs on the back end. Uh, they've got a booking agent. That booking agent makes the reservations. They've got a research agent. That research agent explores the venues and matches those to the preferences of the customers they've collected. They've taken a process that used to take 2 or 3 hours per client to develop a proposal for a custom holiday and turned that into a process that takes 3 minutes. And now that travel advisor just reviews that, makes any final tweaks, and presents it to the customer. A dramatic savings has helped them achieve a 20% acceleration in growth of that business in terms of revenue in just the first few months.
Right.
So that's
Right.
rapid ROI. So it can happen quite fast.
Let me ask you about AI coding broadly speaking. When I think about the opportunities, the work gets done faster. That's very clear as one opportunity for people on the ground. What do you think about the risks here? I mean, as these AI coding tools become more and more ubiquitous and people start to use them a lot, is it concerning at all in some cases at all?
I mean, sure, at scale, agentic AI can either kind of drive sustained progress or introduce real operational risk, kind of depending on how deliberately it's designed, governed, and run. I would say just because it's easier to generate code today doesn't mean that's any good, right? Like, just imagine, right? These agents are outcome driven, right? So imagine that code decides to sell all your confidential data about your customers to your competitors. Maybe it thinks that's the fastest way to turn a profit in your business. Then maybe
Because
that's not
that's the way
progress,
it's been.
right?
That's the way it's been vibe coded essentially, and nobody was really paying attention to it.
Could be, right? And so the question is, how do we develop real enterprise grade architectures around this new technology so we get the benefits without all those risks? So we need the built-in safeguards to unlock scale without the chaos. And that's really where platforms like OutSystems help. We're a deterministic platform for years, right? Customers have been building deterministic workflows where you get the same input 10 times, you'll get the same output 10 times. Now we have LLMs, and by their very nature, they're probabilistic, which means that you put the same input in 10 times, you'll get 10 different responses, right? And that can be great for reasoning and creativity, and that's awesome. But it's not exactly what we want in our most, like, say, regulated businesses on the planet. We actually want a mix, right? You want some of the reasoning to help accelerate decision making, but you want deterministic processes for things like communicating outcomes to customers. Imagine you're a bank, right? And you're making loans to consumers. That's a well-regulated industry. You don't want the responses to your customer about why their loan application was denied written by an LLM in a fully autonomous process. That could create legal risk for you. When you deny the loan, you want a form letter, right?
Let me ask you a question about all these different coding models then that we see coming out. I mean, every month there's just there's a new toy for people to play with, right? And
Yeah.
you see the benchmarks moving up and down. You see people talking about who is winning the race. How do you see the conversation around these models playing out in the long term, given that you integrate with all these players and allow
Yeah.
your customers to use so many of them?
Yeah, I mean, one of the things we're focused on is like being agnostic to the model that customers choose. So in the agentic systems customers build on our platform, it's typical to have 4 or 5 agents being orchestrated in a single system. And often those agents are using different LLMs that are optimized for the use case. And we're starting to see customers actually avoid LLMs for some of them and go to small language models that are more tuned to the specific task at a lower token cost, right? And so we think that customers, and we see that customers are going to want to evolve and change the models they use. As Gemini releases Google releases a new version of Gemini, or OpenAI comes out with a new version of
Right.
ChatGPT. You want to be able to play with that and hot swap those models without reinventing the entire agentic system, and just tune and optimize. And that's what we're making possible by allowing you to bring your own model, bring your own tokens, and essentially use our platform for orchestration. So we really think that this world evolves to the point where what matters is the platform and the orchestration and not the specific model.
Right. Well, Woodson, I want to thank you for joining us on the show. We will talk to you again very soon. That is Woodson Martin, CEO of OutSystems, here on TI TV.
Thanks, Akash.
Okay. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for joining us. We really do appreciate your viewership. I'm already excited for our next show tomorrow. Have a great rest of your Wednesday. Bye-bye for now.